Hey, happy Friday, everybody. So let's go ahead and get started. Let's start today's update off with another little kind of trading lesson. We talked about over trading and stuff like that during the week. Let's kind of close with managing your trade before we get into the stock market and stuff, because we did something as a group that really plays into that. So I wanted to share that with everybody. We'll do the sunrise in the background, right? We're sun's setting on a great week, right? We hit three big winners this week in the options. A lot of the long stocks that we've been even sharing with you guys as stock of the weeks and stuff are doing fantastic. But we did something during the week that really showed if you manage your trades, you can be very nimble and you can take a lot of risk out of options. You hear that a lot, right? And all these ads and stuff like that. Trade options without the risk. But you also hear on the same vein, options are the most risky trade you can make, right? So which is it? Which is it? Well, it's a little bit of both. Options can be the most risky trade you make. That's if you trade them frivolously or you don't manage your trades. But a properly managed option trade can be probably the most risk-free, beneficial trade you can make. Not risk-free, but and we talked about that, right? Think about this. 2 days ago, we opened up calls in DIA, right? Those things were up yesterday morning, what, about 50, 60%. So the market was kind of teetering, right? We noticed the VIX was a little bit over that 20 level that we know the real volatility kind of slips in, and selling can get real extreme in that situation. It's kind of like your signal. So we cashed in that DIA, right? But what did we do? We rolled into a spider trade, spider calls with an extra week. The DIAs were to expired on Friday, next Friday, but we were able to trade those in profitably into the spider trade, which don't expire till the following Friday. So we took a little risk out of the trade, right? What did we do there? Well, we managed our trade. We didn't get caught up in anything. We didn't get panic. What we did was we took the bird in the hand, right? Which was the profit in the DIA. If the selling had continued that morning, the profit would have gone away and we would only had 5 or 6 trading days to get that profit back. That's a lot of risk, right? So instead, what we did was we killed that risk and we took the profits. Then we took some of that money and we bought some spider calls all the way out an extra week. So now we've taken a little bit risky trade and we've eliminated a little bit of risk. We put some money in our pockets and we've got an extra week if something goes wrong. Well, guess what? Everything goes right. Overnight, we wake up this morning and guess what? Those spider options are up 170, 180%. So what did we do? Did we sell? No. What we did was we sold half. Why? At 150%, listen, you sell half, you've now covered your trade. Now it is a risk-free trade. It's absolutely risk-free trade, right? Say you spent $1,500 to open the trade. Now your options are worth $3,500. You sell half, you get $1,700, right? And guess what? That pays for your original trade, and it also puts $200 in your pocket. And guess what? You still have the other half of the options. And what happens? Well, the spider goes up and you can manage it from there, but you have now eliminated the risk from the trade. And that's the point of this. This is not a bragging moment. This is using a real life example to show you manage your trades. Always manage your trades. Don't panic, have a plan, be very disciplined. Okay. All right. Enough with that. Let's move on to the market. It's been a good market this morning, right? The market looked a little iffy in the morning. We got the labor report. The unemployment rate went up. The job creation went down. Everything went sideways. The market started off a little stumbling, except for the NASDAQ. NASDAQ just blew up, right? And then all of a sudden it kicked in, and guess what? We were off to the races again. Again, back to your managing your trade. We could have tapped the rest of that spider out and got another God knows how much, and we would have been off to the weekend. It was an interesting morning, though. I think what the market's looking at right now, guys, when we talk about the overall market and the economy, the market's looking at right now is there is potential inflation coming down the line. And that's a fact, right? We see it in oil, we see it in producer prices and stuff like that. And labor is a good thing right now. We need more labor. But as labor fills up, it also creates more inflation. Why? You have wage growth, right? And things like that. Now, everybody says wage growth is a good thing. And absolutely it is. You got more money, man. Ain't nothing wrong with that. But in that wage group, guess what? Somebody pays those wages, and now they're paying more in wages, and they have to make that money up somewhere else. So what do? Raise prices, right? Prices for the products or services. So it's kind of really a delicate balance here, a delicate dance that goes on. And I think the market's seen that we're still at a point where there's a lot of growth that can happen at this point, and it's a lot of positive growth. That yes, there is inflation coming around, but for right now, everything's as it should be. Things should grow, and everything should be relative in an economy, right? You start getting wage growth, you start getting labor growth. It's natural that you start getting consumption growth. And guess what? Demand for products, demand for services, and you should get a little inflation. It should all be under control and it all stay relative. And that's where the term hyperinflation comes in. When that inflation starts outpacing everything else, then you've got hyperinflation and you've got an issue. What's the answer to that? Well, you got to raise interest rates. Sorry, Jerome. But for right now, everything's looking good. We wanted to talk a little bit about a couple of the stock of the weeks we presented. A few weeks back, we gave you an under $10 stock. Well, as of this morning, it's no longer under $10, and that's ET, Energy Transfer. If you guys played along with it, this morning you're looking at that, and it's a beautiful, beautiful position. Good dividend, right? You bought it probably at about $7, $6, $7. It's now $10. They just had a fantastic earnings report. The other one is Suncor, right? Suncor. We talked about that a few weeks back. A little bit more pricey, right? When we talked about it, it was about, I think it was $21, $22, pushing that 24, 25 now. But this is a nice green energy play. You guys want to get some value from the show, watch the stock of the weeks and pay attention and stuff. I'll always try to share a little lesson to start off with. And then, the market update is basically, you can get that anywhere else, but pay attention to what'll make you money. And the other thing is too, we don't ever recommend anything without putting our own money into it. I don't know. It's just kind of how we do things. The cryptos are starting to really, really get bullish again. We saw for a couple weeks, 2-3 weeks, that the cryptos were really, really subdued and just not a lot of excitement to it and stuff. In the last few days, cryptos really started to pick up. The Ether coin is now it's holding that 3,500, and it looks like it's pushing 3,600. Bitcoin, last time we checked, was up over 5,800 again. 58,000, I'm sorry. And so that's found some stability, maybe another push and maybe another attempt at that $60,000. Our favorite coin, Stellar Coin, has come off that bottom that it set a couple of weeks ago, and it's just on fire right now. The crypto world's a lot of fun, right? The flipping, all that. Are you a coiner? Are you this and that? It's a fun thing. It's an important tool to add to your tool belt. I'm sorry, it's Friday, but look, guys, the whole point of this is, look, I talk about it all the time when I talk about crypto. Don't be like a lot of these guys. Look, I know Charlie Munger and Warren Buffett and a lot of these guys. I think it was the president of the Bank of England today that came out and said crypto's valueless and stuff like that. It's funny though. Goldman Sachs is announced today that they now have a crypto trading team. You know what I mean? The double speak right now. It is an asset. It is a tradable asset. It is a viable asset, and you should have that tool in your tool belt. Don't be afraid of the future. Other than that, guys, look, we don't see this market slowing down anytime soon unless we get a swan out of the blue, which, really, you think about it this week, the only time the market had any trouble was when Janet Yellen kind of stepped on her tongue and started talking what the market doesn't want to hear, which is rate hike. We don't think we'll get any serious talk about that until after summer. We'll see how that goes. But for right now, you know, the energy stocks are doing great and they look like they're going to move up going forward. For you guys that are in the material stocks, X, right? US Steel, you guys that follow us for a long time know we bought US Steel right before when Trump became president. We thought he was going to push that big infrastructure plan, and we kind of stuck with it through the times. And so we're being a little rewarded right now for our patience. That position's actually profitable, and it's only a 1 cent dividend the last few months, but you know what, it's a penny. Okay, I always tell you guys, a penny, man, you only need 100 of those and you got $1, and then you get 100 of those and you got a fin. All right, and then you're on your way to Warren Buffett levels. Other than that, guys, it's Friday. Let's call it a week. Let's go enjoy the weekend. For you crypto traders, of course, you got Friday, Saturday, and Sunday to have some fun with that. But for the most part, guys, it's been a nice, successful week for us as a service. We were 3 out of 3 on options this week. One of them is still going, double, easy money, and stuff like that. They were all just 2-3 day plays. Now, here's what I'll close with, guys, is kind of the strategy. You see, you have to be kind of like a chameleon when you're trading options, and you need to identify what kind of market you're in. We had a rough December because we were kind of fighting the tape and we lost some money on some puts, and it got a little ugly there. But you see how we analyze the market, get back in line with it. It's a volatile market right now, so you don't want to get too long on your options. With the energy play we did, but we got all the way out to July, August, and September on these plays, which most of these options are already nice and green. But for the most part right now on your trading options, you want to keep maybe a 2-3 week time frame, and you want to take your profits quickly, just like we did on Wednesday with DIA, right? We didn't hesitate to take that profit. We relayed a trade, but we took that money first. Why? Because we know it's a volatile market. It can turn it turns faces very quickly right now. And that's all I want to kind of close with that, because it plays along with what I was talking about being nimble at the beginning of this report. Other than that, guys, we'll sit on what we've got right now. We still got that half spider play that DIA plays long gone and profitable, but we're still in the energy plays. We still like Ford, guys. We were buying Ford stock during the week. And we love it under $12. We were willing to buy it in those mid 12s, and we love it under $12. We think, remember the theory behind that too. Remember what I always teach you guys: think your trades through. Think your trades through. Like the Ford trade, we thought that through, right? We owned it going into the earnings report. The earnings were good, but they said they'd lose half their production in the second quarter due to the chip shortage. But they also said the middle of the second quarter is when that'll start to resolve itself. We looked at the date, we were in the middle of the second quarter, right? So we started buying some more. We think it's a great trade. We like Ford. It's not a dividend payer right now, but it will be going down the future. And we feel that there's a gap that's shrinking with Tesla and some of your niche EV stocks. And we think that gap is kind of being closed by your domestic automakers. And you'll see that in the price acceleration going forward, vehicle sales and stuff like that. And so we bought some more Ford, right? We're still in that Ollie trade. Ollie's kind of, it'll give us $2 on one day and it'll take $2 in another day. That one too. You see how we're sticking with the trade though. We're still 3 weeks away from the expiration. Earnings are in about 2.5-3 weeks. So we'll let that thing kind of play, and we play around it while we're going. So that's where we sit right now, guys. Basically, we bought Ford. We added a little bit to our coin position because coin was a little depressed the last couple of days. So we added a few shares to that. I know it's an expensive stock, so we're no different than you. We're not Goldman Sachs. We're not Warren Buffett. We're not Jamie Dimon. We are investors, wealth builders, just like you. So kind of feed off that, guys. You see what we do. Maybe we'll buy 4 or 5 shares. Maybe we'll buy 1 share of coin, but we'll get that position going. You know what I mean? And I always tell you guys that a lot of your brokerages, you can buy partial shares. I believe Robinhood and stuff. I don't think coin's on the Schwab slice list yet. Schwab has a specific list. I believe Fidelity and TD and stuff is there still a TD? Anyways, You know what I'm saying? They have specific lists, and I don't think Coin's on it. You can buy slice shares, but I believe with Robinhood you can buy anything in a slice share. Some of those, but just get it started in your portfolio. Our first buy with Coin was at $331. Our second buy was at 306. Guess what? Yesterday we added a couple shares, a share or two, and now all of a sudden our cost average is just under $300 where we want it. Okay. We don't have a 50,000 shares like a Warren Buffett. I believe right now we've got about 10 or 15 shares. But like I said, every journey starts with the first step. And the first step is never this big leap, right? You get started, get a little momentum, get it going, get it going, get it going, get it going, right? And that's how you build. Anyways, guys, no stock is out of reach. And I'll close with this. There's never a bad time to buy a good stock, okay? Get that position started. You see me do it all the time. You see me with the stock of the weeks, right? If I like the stock, if I like where it's going, if I like the future of the stock, I'm not as concerned with the price as I am with getting it started in my portfolio, okay? And remember that. That's actually an old Warren Buffett's Charlie Munger saying, I believe, there's never a bad time to buy a good stock. And we'll close with the Warren Buffett. Don't forget, the stock market is nothing more than a vehicle to transfer wealth from the impatient to the patient. Be patient. You see how we're building that Coinbase. We're not looking for it to go to 900 tomorrow. We're looking for it to accelerate value over time and bring us a return. All right. So, okay, guys, you guys have a fantastic weekend. From Kalihi, happy Aloha Friday. You guys, everything's kind of opening up again. We're kind of going through rain right now in Hawaii, but hopefully it's a little bit brighter weather where you are. You guys have a great weekend. I'll see you guys on Monday. Don't forget, next week we'll start our weekly crypto show, which we'll either do on Thursday or Friday. So now we'll have the daily morning updates, midday updates like this one. And on Tuesdays, we'll have our stock of the week like we always have. And we're going to add one more on Thursday and Friday. So it's too much going on in the morning reports, guys. You know what I mean? We're talking about stocks, we're talking about options, we're talking about cryptos, we're talking about everything. We kind of segregate them a little bit there. Are we allowed to use the word segregate in today's environment? No, I don't know. Anyways, all right. Well, guys, have a great weekend. All right. I'll see you guys on Monday with the update. And then on Tuesday, we'll have the stock of the week. We'll have another great stock of the week. And then on either Thursday or Friday, I'll let you know during the week, we will start our inaugural crypto show. Okay. Be sure to tune in that. If you're watching this on YouTube, please subscribe. Okay. I hate to beg like that, but anyways, look, guys, I don't care if you subscribe or not, as long as you get something out of this show. Okay. Just keep tuning in and hopefully you get some value out of it. I'll see you guys on Monday.